The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon Eastern Time. Right this time, in fact. And great 2 hours, Steve, and congratulations on last night's webinar. Here it was great. And most importantly, we have programming right through the day. Steve kicks us off, 9 o'clock till 10, usually with Tom O'Brien, but lately without Tom, so it goes Steve for 2 hours. I come on 11 o'clock till 12 with Tiger Technicians Hour. Thursday, Larry Pesavento comes on, and that's the Futures Hour, commodities. He looks at this is the day that probably Larry will be looking at some of the futures contracts that are a little bit different to what he normally looks at, so we'll be very interested in seeing what he comes up with. And then we've got, I always forget. Oh, that's right. We've got, I always think Steve Martin. That's not Daryl Martin, of course, or Dean Martin. Daryl Martin, Diagnostic Trading Hour. Then you got Dave White, you got Ken Shreve, and come right back here to Tom O'Brien, wrapping it up 4 o'clock till 6. So here we go. The Dow's down 52 at 13,875. S&P's down 7 at, let's see, 1504. Comp Index is down 20 at 3144. Gold, after being smashed, just decimated the last couple of days. Remember, I spoke about the DZZ 200% along the gold contract. My target was 509. Pop, hit it right exactly yesterday. Actually went 2 cents above it. Should pull back, should get peak C, and then one more pop to the upside for D. I think that gold is really close to at least a counter trend balance, and a balance of time. Maybe not so much price, but initially price and then time, and then it comes back down. I'm looking at lower prices moving along over the coming months. Most importantly, we've got high-grade copper, which is down 5 at 355. Now, that to me, that is just a really, the signal on the upside back in the summer of 2009 after I had got that major buy signal back at Dow on March the 6th. That was a heads up that the economy was, in fact, slowly improving. Look at that, smash to the downside. So I want to go through a couple of things. It's right on a trend line in the weekly. I'm going to go through all these different aspects, but let me just finish up by saying bonds are only up 26, 30 seconds. Crude oil is down 2, but bonds up 26, 30 seconds. Between yesterday and today, I'm going to go through a bunch of things. Most importantly, look, I got that peak E. I showed subscribers yesterday in the 120-minute chart. Peak E at 1530, round number 1530 at 4 o'clock on the 20th. Today's the 21st. Is that right? Oh, 4 a.m. 4 a.m. And then you also had a peak D that is being established today. If there's no new high bar above 1530, which doubt it. Now I'm going to talk about something that I wanted to talk about on Tuesday. I was so busy, completely forgot. Wanted to talk about it Thursday, so busy, forgot. Wednesday, it was right there in red. In fact, I had stickers all over the show. First of all, my condolences to the Zweig family. Marty Zweig, I had watched him for years with Louis Ruckhauser. And he was such a sober person. He was so thoughtful. He did technical analysis. And a lot of people say he was the first, of the pundits, the technical analysts to make it to the common folk and talk about it in technical terms. And that's true. Of course, there were many technicians before him. But there were two things that he said. One is that never fight the Fed. And that's just a beautiful expression to remember. And the other was, I remember distinctly on the Friday, I had a major sell signal in the Dow from my hand-charted work that I had done. My first client was Fidelity, and they had become a client that summer of 1987. No, trial, and then immediately in July, they became a client. And there we are, August, I get this major top. I remember on the Friday before the crash, the Monday, the 19th crash of October 1987, I remember my in-laws were here. Everybody wanted to go out, and we went to a mall. Not one of my favorite things. Anyway, we went to a mall, and there was a TV there, and I tuned it into public television, whatever the channel was, because it was at 8 o'clock, and I wanted to see it. And there was Marty Spike, and he said, "Lou, I don't really want to say this, but I don't think we're in for a bear market per se. I think we're in. I have difficulty saying this, but a crash." Boy, eyes pop up, everybody. And was that prescient? But in fact, what happened was the Dow had broken 500 points, and then it did the next 500 points in one day, 22% or something like that in one day. Just a wonderful technician, and 70 years old, gone. The newspaper didn't say much about what happened, but it's really sad. He gave us some wonderful information, and he'll be missed. So that was that. And the other was, I was in Brooklyn over the last weekend, and perchance I happened to be at a condo for sale. It was going to open at 1 o'clock. By 1 o'clock, there were already 5 or 6 people pouring out of it. I went up. It was an older building, 1930 or 1920 or something. And it had 2 bedrooms, smallish, kind of, okay, this is Brooklyn. Kind of a nice view. You can see a couple of skyscrapers in the distance, faced the Manhattan side. It had a living room that also contained the kitchen, and it was not very spacious, but it did have deeded parking for 1 car. And this is in Greenpoint, fairly popular near the G line. Asking $634,000, I think it was. Condo fees $400 a month. Well, I went in, and my wife was sitting with the 2 grandchildren. I went up, looked around, asked a couple of questions. There was already one young woman who she had already been pre-approved for the mortgage. She had all the papers in hand. She said, "Thank you." I opened up the little door. There was a tiny little balcony, really tiny. You just opened the door, and all you could do was put your head out. That's really it. Very nice place. No air conditioning. And she said, with all the others there, she said, I've seen everything I need, and she was gone. Oh, she took a couple of pictures, and she was gone. And my suspicion is that she went right back home and put in an application, and that's it. By the time I left, which was maybe 10 minutes, not even 10, maybe 7, 8 minutes, the doorbell kept ringing, and there were, I'd say maybe up until that moment when I left, 15 people. Then I came downstairs and I said, "Wife, you've got to go." She says, "You tell me about it." I said, "No, you're going up." So she goes up. I'm sitting with the grandkids. And she goes up for less time than me, and she comes down. In the time that she was up, I saw at least another 5 people going in. This is now 1:15 or 1:20. Let's call it 1:20 for argument's sake. Open at 1, right? 1 o'clock and 4 or 5 people have already been in. I believe that there is going to be a period of excessivity going on in Brooklyn, probably, I would like to say, into this coming fall, maybe a little longer. These things don't just happen overnight, and there's a lot of inventory coming onto the market, and that to me is going to be a heads up for a number of aspects, and that includes Boston, where Building permits are at record levels. We're talking about a whole new building series of complexes on the East Boston side that the mayor is trying to push for. I have never been here. I've been here almost I've been over 40 years in Boston. I've never been here ever where there hasn't been a building, a dearth of hotels they talk about, and then a hotel bust. I just don't see any reason why that should not happen in this particular instance. So everything's looking good, but I smell signs that we are reaching in the real estate market here on the Northeast, on this part of the East Side, that I can tell. I hear the same thing going on in Connecticut, all the way along, all the way up the coast, from New York to the Boston area, even Portland, Maine. And I'm going to watch this real closely. So I wanted to get that out the way because I think it's really important in terms of looking at the big picture and that thing that I call excessivity. Remember, the housing crash really did not impact the Northeast the way it normally does. Houses were down, an average of, in the Boston area, let's call it, go for the worst case, about 12%. Maybe a little bit more in certain sectors, but a lot more in others, but a lot less in others. So that is really unusual. I've never seen that. So talking about something that I've never seen before, and we're going to take calls in a moment, I wanted to talk just for a brief moment about the volatility index, which skyrocketed from $12.08 to $15.77 this morning in a single leg A up in the 120-minute chart. About the TRIN going to 3.06 yesterday. I have to tell you, yesterday the volatility index went to, I think it was 14. I typed it in, 14. This is the first hour and a half. I think it went to 14 something, 1468. That's right, 1468. I don't recall, if I show you this, the volatility index, I don't recall a single move ever. No, I should never say that. It's not ever. I don't remember a single move off a top. The IWM made an all-time high yesterday. So I don't recall where, and the other indexes just fractionally missed a top. I don't remember such an instant, vicious sentiment reading. That, to me, is an aberration. When the Dow hit, when the volatility index went to 7.89 on the 21st of December, that was the other time that we saw it. But that was, remember, intraday. That happened overnight. There was all that bad news. And we opened up at that huge level. And that was on the, let me just double check. There it is, right there. That was on the 21st. So the Dow opened at, the S&P opened at 1443.67, had a low of 1422, and closed at 1430. So, going to be very interesting. I'll talk about that as we move on, because the reading that I had said that within 1 to 2 days, there should be at least a 7 to a 9-point E-mini S&P E-mini rally. We'll be back with Rick from British Columbia straight after this. Basil Chapman, Dow's down 60, S&P's down 8.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. And so let's go straight away to Rick in British Columbia. Hi, Rick. How are you?
Basil, how are you doing today?
I'm doing well. Thank you. How are you?
Good. Hey, I'm looking at one of the high flyers here. That's Goldman Sachs.
All right. And so you're looking at it out of curiosity, or you're looking to do something with it?
Well, it looks to me like this thing should pull back to the 125, 130 level at some point in time. And I just like I don't know where you started your A, cause, do you start in June?
You're looking at the daily chart?
Yeah.
Okay, the daily chart has a number of aspects of the ChapmanWave methodology. If you want to, let's see, start in June. I'm going to do this because I'm not sure. Oh, I should have put that up. I can't. Let's see. Here we go. If you go back to the June low of 90.43 in the daily chart, there are just beautiful patterns here. Left side, right side, price time match with cup formations. There was a cup and handle, which finally broke out. And that cup and handle ran all the way to the, on the 20th of December, went all the way to 129.72, made a small little consolidation, and then literally walked the 9-period exponential moving average. And I've got the chart here. This is just a beautiful example of so many of the ChapmanWave techniques. The MACD, the fast-moving average of the MACD, the slow stochastic holding above the 80% level. And then I got a signal yesterday that peak E had been made. I looked at a number of the XLF charts, and I was running out of time. For some reason, we used to always talk about the 200% inverse XLF, and for the life of me, I just on the spur of the moment couldn't find it. Well, you remember what it was? We looked at it all the time. Everybody used to talk about this. That was the short, 200% short. Someone in the den's going to remind me. I just can't remember what it is. So I thought, is that an opportunity to get that? Was it FAS, FAS, SKF? Let me just look at the SKF for a minute. SKF. Ultra short financial. Yes, okay, that's the one I was thinking of. Let me write it down here, SKF. So I couldn't get that, but my XLF was giving me the same signal, a peak D, and my thinking was that because of the turnaround yesterday, and let me just go through this because I forgot, I think I might have mentioned it, but there's a chance that I forgot there was so much going on. My IWM, the IWM was in leg F yesterday, and it went to 92, went to an all-time high, 92.68. And then it pulled back sharply intraday underneath the 9-period moving average, and now it's breaking just an initial up-channel support line. The most important line will be somewhere around 89.29. So I just want to put that together because if we got everything working in concert, it says peak D in the XLF, peak F in the IWM, and the S&P Select Financial Spider Fund has made a peak D, and I've already drawn the support level, and that support level will be important because it'll be the candle of the 23rd of January between 1721 and 1732. So now let's go to Goldman Sachs because it's an important part of the XLF. I can't remember the proportion, but I think I wouldn't call it the apple of the XLF, but it's a big percentage. It's made the pattern that I talk about, that stalk leg pattern, which makes the leg, it makes the body, it made the neck and the head, and now it's in the beak section. Just anyone looking at the chart, you'll see exactly what I'm talking about. It's right there. Now the XLF, the Goldman Sachs, I've got a very short-term sell signal based on some of the techniques I use, and this is what I've been talking about for a little while. There are times when an index, historically, you can look back and you say, "Oh man, that was perfect, gave exactly the right signal." But as you're within the signal, it's very hard sometimes to time it because sometimes the signal how can I call it? It restarts and it goes even higher. So then all of a sudden you say, "Gee, wasn't I looking at a sell signal there?" But in fact, the signal has gone high. Sometimes the signal gives you a perfect turnaround in the signal, but the price doesn't behave. So for me, it was really important to look at the 9-period exponential moving average for the first time. This is an incredible tool. For the first time since Goldman Sachs, GS, which is trading at 151.53, down 365, since the 31st of December, this is the first time that it has actually not just touched the 9-period moving average, but I shouldn't say close, but it is way underneath the 9 EMA. So your thinking is correct. I'll come back with some figures as soon as we finish the break. So if you don't mind holding Rick, we've got Rick in British Columbia, we've got Chris in Merrimack, New Hampshire, I think it is. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Trade Editions Hour, 877-927-6648. The Dow's down 70, S&P's down 10. Yesterday as well, the S&P was down way more, actually way more than the Dow. And as I say to subscribers, yesterday's VIX acceleration to the upside and the trend moving powerfully to the upside, 240%, I can't remember, it was a huge move, essentially is, I would have expected, if someone said to me that's what happened, I would have said, wow, the Dow must have been down 280 to 320 points, S&P down 35, and today, continuing that move to the upside, I would have said, well, now is exactly what you would expect. So looking at Goldman Sachs, which is down 2.3% at minus 359, it's had a spectacular move, and in 2 days it really has given back a couple of weeks worth of action. So what I've done in the Goldman Sachs daily chart, Rick, is I've drawn a left side, right side price time match. This is what we call the beak in the technique. The beak says that you should come back into the body, and that body would be somewhere around a high of 148, around number 148, the high of the 31st of January, towards the low of about 143. The 9-period moving average in the weekly chart is in fact at 144.34. I love the MACD and stochastic in both the daily, in the weekly and the monthly. To me, that is really important, and it's only legs C up in the weekly chart. So I believe that there's a really good chance that Goldman Sachs, the let me put it this way. If what I'm looking at as a rotational correction is correct, number one. Number two, if the severity of the sentiment indicators coming off almost recovery highs, and in one case the IWM all-time highs, is a harbinger of the fear factor, the speed with which you reach the fear factor, I would not be surprised if a huge chunk of the down move, at least for this phase, is done. We might have a bounce and then come back and do like an A to B equals C to D. So where does that take me? That takes me to 145 to 143 as a potential target. 10 points down, another 10 points would be 5%. No, a little bit more. About a 6% move in Goldman Sachs. And then I would not be surprised to see buyers come in. That's just the way I'm looking at it now. I'm completely wrong if it closes under 142 within a week and a half to 2 weeks. But at this particular point, I'm looking at it as a consolidation, much-needed consolidation, huge support in the mid-140s. Worst case, I can see 137.90 to 137.26, the gap down. That would take you to about the end of March, if there was a price, left side, right side price, time match. But in the meantime, the 11th of March would be a test of this particular technique at the 144 to the 143 level. If it hits it before then you've got to anticipate it could go lower. So I hope that helps you. Now, what's the upside? The upside is a bounce, and I can tell you this, that if there's a bounce within the next day or two, by Monday afternoon to Tuesday morning, if you've seen a bounce and Goldman Sachs is over 154.30, then I'm definitely going to stick with my target of a downside 145 to 144s. If by Monday afternoon, Tuesday of next week, Goldman Sachs is anywhere in the 148 to 147 area, then I've got to say that's the first decent support. So I hope that helps you.
Yeah, it does. Well, I know today it's coming down with big volume.
Yes.
Big time. Okay, well, thank you very much.
Thank you very much, Rick. I appreciate it. Let's go to Chris in Merrimack. Hi, Chris. How are you?
Hey, Basil. Thanks for taking my call.
My pleasure.
Hey, what's your take on the volatility index?
Okay.
I know that we have a huge gap there from December 31st to January 2nd, which, we might not fill entirely, on this move down, but I'm in the VXX from the low of yesterday.
Oh, outstanding. Okay, let me explain something. When you have that kind of cushion in the volatility index, it makes it so much easier. Because if you ask me right now, what should I do? I would say to you, you know what? The speed with which this could pull back, that's not to say that it isn't going higher. I'm just saying that the speed, in other words, I've got this ChapmanWave trend gauge flashing. It's got a tremendous success rate. I have no idea if it's going to work now. All I can say is that it has a tremendous success rate. If it does give you this really powerful sudden up move, and I always call it a counter trend move, which could then fail at the end of the day. It refers to a one-day move within 2 days. That's from yesterday, so that includes today and tomorrow. If there is this counter trend move, you could see the VIX pull back. So that's the reason why I would say to you, thank goodness you're in. Now this is what I'm saying to you. 16.67 is the 200-period exponential moving average. There's a technique that I use. The $12.29 low that the volatility index made, I'm looking at the VIX itself, not the VXX, but the volatility index itself. And you're absolutely correct. In my newsletter every day, I show this, and I showed, in fact, up until today, I especially showed, I'm going to move it over right now, I especially showed that gap between $15.93 and $17.88 from the 31st of December, because on the 28th, the high was 23.23, and within a very short period of time, we went down to the 13s. So I especially show that gap. So that gap is still excellent because it was 50. Oh, I just remembered. 1570. What did I say? 1593. We haven't got there yet. So this is what I'm looking at. In the volatility index daily chart, there was an arch formation. An arch formation. that's the dreaded H pattern, with a close at $12.08. That was underneath the 12.29 area. Normally, what you would expect in the ChapmanWave methodology is that a move like that says that there could be a bounce, and that bounce should not go above the arch high, in this case peak D at 1475 on the 4th of February. Well, in one day, we went to 1468, and this is the second day. That essentially says, be careful, because if the stochastic starts to rally, which is only at 38%. So far, that's not a positive thing. It's only at 38%, but the MACD is good. If it starts to rally, and at some point the VIX index hits 16.67 and hugs it, in other words, it gets there, it doesn't pull away, but it holds there, there's a chance that the volatility index stochastic could climb towards the 65 and then 80% area. If the volatility index starts to hold in the 80% area, not just pop there once, but hold, this market has time and price to the downside. As it stands right now, I have to say, wait for Friday to see where it closes in the weekly chart, because that's very important. Now, I did a little work. I'm going to include the TRIN index. You didn't ask about it, but they kind of are going together here.
Yes.
My short-term trading index is I say mine, but in fact it's Richard Arm's trading index. I use it completely differently to Richard Arm's. I use the ChapmanWave methodology. Has gone to a peak E at $3.06. It's now trading at $155. My suspicion is we are getting real close to a very nice bounce in the S&P, the E-minis, which of course will take the S&P and will take the Dow. That's a counter trend. So now let's go back to your volatility index. You're looking at this as a potential hold going at least into the gap or perhaps higher. Is that correct?
Yeah, I was hoping so, but if not, I was also, because I was also thinking of closing it out, soon and just getting back in.
Okay, so let me do this. Do you have enough that you could take half off?
Yes, I do.
Okay, so I'm going to make a suggestion. The Dow's now down 52, S&P's down 8. So far, we haven't seen signs. Actually, I do see signs of a bounce, but now let me go to my 120-minute chart. Hold on one second. I'm going to give you the answer right now. This is single leg A up. I got it. Why didn't you put a stop in? Or at least if you're watching, you're probably watching it. If the volatility index starts to slip underneath 15, it's at 1549. If it slips under 1513, now I'm going to give it a little bit more room. Let's say 15006. If it slips under 1506 anytime today, take a little bit off, and my suspicion is you're going to be able to add it back at about the 1420 to 14 area, 1371 area. If you feel, you know what, I'm in at a good position, I don't really want to mess around, it might be very difficult to get back in. If you want to hold it, then make some stop on your position, say 1410. You understand what I'm saying? There are two ways of doing it. You can take profits right now on some position, and you plan to put that back, or you say, you know what, I don't want to fuss. The IWM has made some kind of a top. The Qs are making. I think they're going to be lower prices to come. I don't want to mess around. So there are two ways of thinking about it. But if it does get down to the 14, 20, 14-ish area, that's probably where I'd say, okay, be a little bit careful. So that's my thinking right now. But as an entry point back, you're in at about 12 something, right?
Yes. Yeah.
Yeah, that's fabulous. Now,
so
there's another way.
I could add then around 1371 if I wanted to add.
That's another way you could say, I'm in at a great level. I'm not going to mess around. I'd rather stay with my position and then have a trading position with a fairly tight stop between 1420 and 1371. And if I miss getting it, that's fine, because I think that's an even better way. I don't want to mess with your position, other than to say there have been times, I'm not sure this is one of those times, because I do have signals, right across the board that say we should consolidate here. But there have been times where there's been a single leg up and that volatility index has come down real quickly. I'm not sure this is one of those times. I just wanted to warn you. But I think your thinking is correct. Rather stay with your position and probably add a little bit more at that area, and that one must have a tight stop.
That's perfect. Basil, fantastic. Thanks so much.
And thank you so much for calling. Thank you so much for calling, Chris. Let's hope our snow coming this weekend won't be too bad.
Yeah, thank you. Bye-bye now.
Okay, thanks for calling. Folks, the Dow is now down 53, S&P is down 8. I'm going to go through a couple of things. I wrote them down here. I went through the IWM. Now look at this. This is MAR. I don't know if any of you have tried to get a hotel booking anywhere recently. The prices are unbelievable. They are really very high. And in fact, they're selling out very quickly. Marriott has had a fabulous move. It bumped into very strong trend resistance. Marriott Hotel MAR at 39.31. I'm picking this up because it made beautiful candle doji high on the 15th of a couple of days ago. It's pulled back from the 41.73 level to 39.31. I'm watching this closely because the weekly chart is just after a peak. D in the weekly is just underneath the 9-period moving average. But the stochastic's at 93% and the MACD is still very good. You can see why when I was talking to Rick from British Columbia, my emphasis is on the weekly charts and my monthly charts, and I love them. I don't have anything but a consolidation happening. And in fact, yesterday's sentiments indicators are telling me that there was so much negativity so quickly that I wouldn't be surprised if in the best stocks a chunk of the move down has already occurred, and now we're looking at time and some price. But the weak stocks, that's something completely different. This is a bifurcated market. I will know by tomorrow afternoon, Friday at 4 o'clock, whether there's going to be a rotational correction. But so far, it's nothing unusual. The XLF, the S&P Select Financial, made a peak D in the ChapmanWave, pulling back like it should, making an F/B in the weekly. I don't have any reason to think that it can't be leg B, and the monthly chart is a leg C, looking very strong. I have to call this a consolidation. So that's the way I'm looking at it there. And there was one other thing I wanted to do before the break, just in case we get some calls. Yes, gold. The GLD. I sent this out to, actually, I had one of our Tigers email me to ask me, because they're studying the ChapmanWave methodology, and I love to send back charts the moment anybody asks me for it. I just take that time. I stop whatever I'm doing, because I think it's so important that there are more and more and more people starting to use the methodology of the ChapmanWave. I respect that, and I want to fulfill their requirements. I'm not interested in whether they are subscribers or not, but if they've been studying my technique and taking my courses, I want to help. So this is what I'm looking at in the GLD. And as I said, the DZZ has gone to a leg C. Now it's probably a peak C, and this is 200%. This is the DB Gold Double Short ETN. I don't think it's going to rest until it tests the 5. It's at 511 was the high yesterday. I said it said 509 to 513 actually. So it went to 509. But I think it's going to touch the 560, maybe even 522 area, and then we should get a really sharp decline in the DZZ and a nice bounce in gold. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians, my Pearl engineer. I swing from these 3 different keyboards that I have around me here with all these 6 screens or whatever it is, and I'm not the best typist. I use like my clarinet fingers, 3 or 4 fingers, and I don't know if you can make out what I type there, because I swing around and I type, but I miss the buttons, and I go to the next one. So the Dow's down 47, and the S&P's down 765. I want to go through a couple of charts here. JJC, which is the iPath DJ AIG Copper Trust series. It's an ETF. I think it's an ETN, actually. It doesn't say. This is trading at 44.78. It did make the peak D. Copper itself didn't make that last peak D. It sort of failed. But this one did. And that peak D is in the synchronicity of these arch formations. Major support will be at 44.40, and it hit a low today of 44.57. I'm watching that closely. The monthly chart is not very pretty, and the weekly chart is in this trading range, but making lower highs, and I don't know yet if it's going to make lower lows. So that's going to be very important to me, number one. Number two is the USD JPY was holding really well, and then all of a sudden it pulled back. But you know what? It is still within this chart formation that I call the this is the second body. So in other words, it's made of the leg, the body, the neck, and then it just a very brief little head and pullback, and then it started a second body. This is the one, like the Dow, that only barely went to a nominal new high afterwards for the neck and pulled back. I thought that was C/G, and I thought preference C with a pop-up, one more pop-up needed. Doesn't have to happen now because of the sharp pullback, but we can go back into the body. Now, this is different. So this is holding well, but look at the monthly chart, the weekly chart. For the monthly chart is fantastic. Did it make a new high? 94,980, 94,450. It hasn't. It just missed by a couple of cents going to the high. This is the US dollar, Japanese yen of 94,980 back in May of 2010. The weekly chart says, hey, I've had a spectacular move. I could easily pull back from 92.96 to test 90.520. I could even pull back further. I could even go to the 88s. But at this particular point, I'm waiting for the pattern to unfold. And if it takes out 92.21, then it's going to be coming down right now. The technicals, you see, this is what I was looking at in the down. It was a spec on my part to think that you'd get that extra leg. The technicals were really failing. Remember I said sometimes price can go longer than the technicals give you a signal. Every technical, whether it's the RSI, whatever it is, on balance volume, the technicals didn't quite match. Oh, don't have an OBV here because there's no volume on this particular thing. Now look at the EUR USD. The EUR-USD has pulled back from a peak D daily, from a peak D weekly, in an exact price time match, not exactly made it by one week early, and then it pulled back. That has support at the one is 1.320 right now. That has support at 1.307-ish, somewhere around there, 1.30, 1.2970-ish, 1.304. 1.305 is the 200-period exponential moving average. And then I wanted to show something. Oh, and bonds. Look at this. The USH 13 up 27.30 seconds. There's something wrong with this picture. Bonds should be at least at the 146 area right now. They can still do it, I'm saying, but at this particular point, with the volatility index and the trend gauge pushing so high, bonds have not yet shown that money's coming out, money out of stocks into bonds. At least it doesn't seem to me that it's showing. So I'm watching all of these things very carefully. Let me do this before we wrap up, because Larry's coming on. I'm sure he's going to go through all the different instruments in great detail. Let me just say, if the Dow closes under 13,850, the next level of support will be 13,820 to 13,750. If there's a counter trend bounce late this afternoon or tomorrow, watch 13,950. That's the 9-period moving average for resistance or support. So I'll be back tomorrow. Have a wonderful day, everybody. Thanks for being here. Stay tuned for all the shows this afternoon.